Hello and welcome everyone to Gold Asset of the Day for the 20th of July 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week, we have the European Central Bank announcement scheduled on Thursday. The expectation here is that we're going to see a 50 basis point increase in interest rates, which will be the first time in a number of years that the European Central Bank has increased their interest rates. And we also have the FOMC statement next week, which is again going to be a large catalyst for the market, where they're anticipated to go ahead with 75 basis point interest rate hike. Now, these are going to provide massive catalysts for the commodity markets, especially, of course, the metals, gold, and also the energies. So far this week, we have WTI crude oil up 7%, Brent crude oil is up 8%, natural gas is up 9%. We went through this in detail with you on the week ahead commodity report as well. Big opportunities on oil to capitalize each time it's coming back down towards $90 per barrel. In fact, WTI crude oil on Monday dropped down to $92 per barrel. By the close on Tuesday, it was already back above $100 per barrel. This enabled us and our clients at the Gold and Silver Club over 2 trades to bank over 1,000 points profit on Monday on crude oil. So we've taken advantage of this volatility, bought in on the dips here as we've seen energy prices come back down towards the lower end of their ranges, back towards the swing lows, and very simply the price does not stay there at all for long before it slingshots higher, offering you some brilliant opportunities to take advantage of the current volatility. It's absolutely not a buy and hold market at the moment. It is a trader's market. You can take advantage of these 500 to 1,000 point ranges that we're getting daily on the energy markets, on the metals, and take advantage of this volatility. Make sure you're constantly locking in profits, because you can keep coming in and out the markets with this volatility that we have in the market right now. If you go over to gold at the moment, so gold, we keep seeing retest back towards the 1,700 level. This at the moment is the major area of liquidity here. I would perceive buy opportunities again this week at 1,700 or lower. I definitely can't rule out a revisit back down towards the 1,690 level. So far, we are holding up above the 1,700 level. We have accumulated positions at the lower end of the ranges here, and I'm looking for a bounce between now and the end of the month back towards that 1,725, 1,735 handle. But I definitely can't rule out further range bound price action. But again, just be very quick and nimble when we do get these breakouts to the upside. Offers you opportunities to sniper in nice and low and bank very quickly. We've seen that multiple times as well with oil over the last week. It dropped in a single session over 1,100 points to the downside last week, where we saw it drop all the way down to $91 per barrel. And then within just 1 week, we've seen oil prices break back above $100 per barrel. Yet again, over 1,000 point ranges that we're seeing week in and week out, which is offering you just fantastic opportunities to trade these markets, lock in those profits regularly, come back into the markets. This is exactly what you want to be doing at the moment. If you just buy and hold, you'll get crushed in these markets. You won't make any money, and we don't want that for you. So another note is that in the last week, hedge funds and money managers, it's quite notable, 2 positions in particular where they have increased their overall net longs. That's been on crude oil, but also copper as well. Copper we highlighted to you as well on the week ahead commodity report. Big opportunities on this market where we seem to have capitulated last week. We're starting to build up that base at the moment. On Tuesday, copper prices are up over 2.5% to the upside. We've actually sniped into a number of positions over the last few days. We now have 4 positions on copper, which is getting that nice breakout to the upside at the moment on Tuesday. Alongside that, of course, oil, hedge funds and money managers, they've increased their net long positions again in the last week. So of those that have a position on oil, 85% are long. As I mentioned before, oil spends very little time below $100 per barrel. Brent crude oil briefly broke below $100 per barrel last week, back down towards that 97, 96 zone. Already it's back above $107 per barrel since Thursday of last week, and it's Tuesday now. So just within the matter of 4 sessions, we've seen a huge recovery for oil prices. You've got natural gas breaking back out towards 2-month highs, up 9% in the week, and of course WTI crude oil dipped down towards $92 per barrel at the beginning of the week. We sniped it in fact, on the Sunday open. We've already seen a breakout back above $100 per barrel, which enabled us again to bank over 1,000 points with our clients at the Gold and Silver Club over 2 trades just at the beginning of this week. So yet again, absolutely it is a trader's market right now. Keep an eye this week on the European Central Bank announcement on Thursday. That is going to create lots of volatility in the market. Just going back to last week as well, it was on Thursday where we saw the dollar depeg from the euro, but subsequently subsequently, we have seen a capitulation to the upside. The euro US dollar has had a big recovery back towards 1 week highs. And with that, we've seen the dollar index start to break down from 20-year highs as well. So there's going to be a lot of attention now on the European Central Bank announcement on Thursday, where they are expected to go ahead with a 50 basis point increase in interest rates. So this will be a major news item to have on your radar. Another opportunity, of course, to trade that too. Then next week, we've got Wednesday's FOMC statement, another huge opportunity for you to trade that volatility. So with that, if you would like to learn the research-driven approach to the market, ditch those outdated technical indicators and gimmicky technical analysis strategies, you want to be using data-driven processes in these markets where you're utilizing statistics, data, market intelligence, alongside that learning the intermarket correlations in the market, the ratios, the capital flows, the daily, the weekly, the monthly, the quarterly cycles for each commodity, the macroeconomics, the fundamentals, the geopolitics, and of course how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.